Well, the New York Yankees are going prime. The team announcing 21 games this season are going to be streamed on Amazon Prime. Amazon was part of the $3.5 billion purchase of the Yes Network. That is the Yanks television home. Amazon extending its sports footprint after news broke last week of its 11-year, $1 billion deal with the NFL to exclusively stream Thursday Night Football. But they are not the only ones that are betting on the sports industry. Joining me now in a Fox Business exclusive, Roundhill Investments co-founder and CEO Will Hershey. Hi, Will. It's good to see you here.
Thanks for having me.
So you just launched this sports-centered ETF. Love the ticker, MVP. This is really a pure play on sports. Why now?
No, that's exactly right. And you have to have fun with the tickers, right? MVP, why not? When we look at the sports industry, I think there are a few things that are kind of playing into why we thought it made sense to launch this ETF now. The first is probably obvious. We kind of view sports as one of the purest reopening trades out there. There's tons of pent-up demand from fans to get back to stadiums. That's going to drive merchandise sales and, more importantly, ticket sales that flows down through the leagues and the teams. The second is really what you just touched on, the media rights story that's playing out right now, which is one of the biggest drivers for these assets. The shift from linear to streaming, even though we had heard for years about declining television viewership for sports assets, these are the crown jewels. So you saw Amazon Prime going after the New York Yankees assets. And on top of that, last week, the NFL just signed a tremendous deal, over $100 billion over 11 years. So media rights are going to be one of the driving factors. And then kind of the last play here, it refers to the technology in sports betting. Sports betting is rolling out on a state-by-state basis. That's going to drive engagement, particularly from those younger fans that have maybe been lost over the years. Live betting, especially for a sport like baseball, is going to really bring in that younger fan base, is part of the reason why we're excited.
Well, you're also making a bet on the Knicks and the Rangers, because I was looking at your holdings breakdown, and your top holding is Madison Square Garden. So I thought that was interesting. I wanted to ask you about that. You've got Liberty Media. I know you're talking about TV and sports because, who wants to watch sports on your computer? You got to have a television, I think. And then Manchester United. That was another interesting one. So you've got some European plays in there as well.
Yeah, no, it's a very diversified ETF in terms of exposure. About 50% of the portfolio is invested in leagues and teams that are actually outside of the U.S. And kind of as we look forward, I think there are going to be more of these teams and leagues that look to go public. Balance sheets are in a difficult position right now. We have Club Brugge in Belgium that's filed for IPO, the parent company of the UFC. And I think we're in a really interesting point in the market right now where retail engagement, we saw what happened with GameStop. More retail investors than ever before are paying attention to the market. I would look for teams to potentially IPO and take advantage of their fan bases. You touched on a couple of our top holdings. MSGS is a really interesting name, trading at around a $4 billion market cap. I would say maybe the Knicks are even worth around that kind of on a standalone basis.
Maybe so. We'll see how their season plays out. But I was looking at, again, you've got Nike, Adidas, Callaway, Puma, Under Armour. Why those names? I mean, retail can be tough. I mean, online retail can be strong, but retail in general might see a little bit of pressure this year.
No, I think you're absolutely right. And I think when you look at the portfolio as a whole, I touched on it being a reopening trade. In many of these cases, these are kind of the value names as well. When you look at, where are these names trading versus kind of where they were on a pre-COVID basis. We look at these kind of sports apparel brands as a way to play into that reopening trade. Callaway Golf. I mean, think about how many Americans out there are ready to go back and hit the links following being pent up and staying at home for the past year. We think those sales are going to be strong as people, not only in an amateur level, but as a professional level, really get back to engaging and playing sports.
Wow. Well, you know what? It's very interesting what you're doing here, Will. And I, again, love the ticker. And it's a solid portfolio of companies, I got to say. Good play. Good luck to you with this one. Thank you, sir.
Thanks so much. Appreciate it.